Touch base with Robert Parker, Senior Advisor at Credit Suisse, who joins us on the sidelines of the Credit Suisse Global Mega Trends Conference in Singapore. Robert, thanks very much for taking out the time and speaking with us. First up, I just want to get a sense from you on what is the mood among international investors and change in the power in India?
Well, I think the important point is that if one looks back to 2013, there was a high degree of investor disillusion with Indian economic policy. I think there was disillusion with the lack of reform process. There was disillusion with the lack of opening up of a number of sectors to foreign investment. And there was obviously serious concern about the growth slowdown. And I think many international investors were concerned last year about growth staying below 5% for the medium term. Now, if we get a much more aggressive pro-growth strategy, if structural reforms, particularly opening up foreign investment and pulling back Indian funds overseas back into the Indian economy, if that is achieved and investors have a clear vision of investments, of economic strategy by a new government, pushing growth back to perhaps 5.5% or even 6%, which frankly I think is entirely possible, then you will see foreign investment flows continue into India and if anything may in fact accelerate.
Talking about the Indian markets, we're trading at record levels on especially the benchmark indices. Are valuations looking reasonable, or would you be comfortable recommending investments, given that valuations seem a bit in the fair to expensive range?
The current market levels, we've had a very good rally. Valuations are looking slightly stretched in the near term. The market is discounting a decisive BJP result in the election. Obviously, if that result is not decisive and the BJP has to rely on regional party support or minority party support, such as the AAM, then I think there is scope for some short-term market disappointment. But I emphasize short-term. And as a result, when the election result is finally announced, I think there is scope for some profit-taking, some reversal in the market. But I would argue, other things being equal, that actually represents a buying opportunity. So, yes, the Indian market in the last 4 or 5 months has moved from being undervalued to what I would regard at the moment as fairly valued. But, should you chase the market today, I would actually I would iterate a note of caution at current levels.
Bob, certain sectors of the Indian markets have performed very well in 2014. Beaten non-cyclicals are back with a vengeance. Is this just the start of a rally in such stocks like infra, cap goods?
The answer to that question is absolutely yes. And if one looks at the Indian market at the end of last year, one had a situation where cyclicals were cheap relative to defensives. And that was logical, given the performance of the market in 2013 and the general underperformance of emerging markets relative to developed markets. And I think it's logical that we have had this cyclical rally. Now, with a new government, I think one of the priorities is going to be to encourage domestic and foreign investment into the capital goods sector. You mentioned the infrastructure sector. This is clearly going to be a priority, whether it be infrastructure in transport, infrastructure in the energy sector. And I actually think that on any setback post-election on profit-taking, investors should adopt that setback as a buying opportunity. And I would focus, as we are focusing worldwide, on positioning ourselves in the cyclical sector, capital goods sectors, versus the defensive sectors.
Right, pharma is another sector finding favor with the market. What's your view there?
There is some modest value left, but as you correctly point out, the sector has done very well. And consequently, I think there is scope for investors to rotate into other sectors. One reason why the pharmaceutical sector has done well is obviously, its high cash levels, its defensive sectors, the dividends that one is seeing out of the pharmaceutical sector. I would also highlight that in recent weeks, globally, merger and acquisition activity has focused on the pharmaceutical sector. And obviously at the moment we don't know the outcome, but we do have Pfizer looking very closely at AstraZeneca, and we have a number of other M&A deals either in the pipeline or potentially in the pipeline. And I think that has probably elevated valuations in the pharmaceutical sector worldwide, and India to some extent has been a beneficiary of that investor sentiment.
For which sectors of the Indian markets are you overweight on currently, and where would you like to pair your positions?
Well, our focus has been on sectors which I think could benefit from a pro-growth strategy from an incoming government. We talked about infrastructure earlier on, and infrastructure in transport and energy is one sector I like a lot. The banking sector has been very volatile, but I do think that opening up the banking sector to more competition, the development of the banking sector, to push more products to Indian consumers and investors, I think there is scope for increased profitability there. If we see, as I think we will, the Indian rupee stabilize around current levels, I like the export sector, and actually I like within the export sector the IT sector. And I think one interesting observation at the moment is look at the Indian IT sector relative to some of the almost bubble-like characteristics that we have in IT sectors elsewhere, particularly in the US. And one could look at the Indian IT sector and say it is cheap relative to some of the overvaluations and problems that we have had in the IT sector elsewhere.
And finally, Robert, before we wrap up, do you expect Yellen to tinker with with policy rates going forward? What commentary do you expect for her to lay out from here, given the fact that tapering is pretty much on course and there's much focus on the labor market improving?
Well, clearly the unemployment target under previous Chairman Bernanke of 6.5%, that is now history. The labour markets are improving. My own forecast is that by the end of this year, the headline unemployment figure in the United States will be close to 6%. Now, that, however, masks a very significant number of people who are not counted in the official unemployment data. And if one counts official unemployment plus hidden unemployment, or people who are not on the unemployment register, real US unemployment is probably close to 10%. And it is that spare capacity in the labour pool that Mrs. Yellen and her colleagues on the Federal Reserve Board are really focusing on. And as a result of that spare capacity, that's one of the reasons why monetary tightening will be very slow.